Welcome to Thoughts on Investing. Today, we're going to talk about something really powerful on Wall Street. It's an indicator that doesn't measure earnings or interest rates. Nope, it measures pure, raw emotion. We're talking about the VIX, way better known as the market's fear index, and I'm telling you, understanding this can completely change the way you see the markets.
But first, just a quick reminder for everybody. This explainer is for educational purposes only. It is absolutely not financial advice. Markets are tricky, so it's always critical to do your own homework before making any investment decisions.
So let me ask you a question. What if you could actually measure the single most powerful force driving the market? I'm not talking about numbers or data. I'm talking about fear. Well, it turns out you actually can. And that's exactly what the VIX is built to do. Once you get this, you'll see the market in a whole new light.
All right, first up, a thermometer for fear. Let's break down what the VIX actually is, and I promise it's way simpler than it sounds.
Okay, so here's the official, kind of nerdy definition from the Chicago Board Options Exchange. The VIX is a measure of the market's expectation of volatility over the next 30 days based on S&P 500 options pricing. Phew, okay, that's a mouthful. So what does that really mean for us?
Let's just cut through all that jargon. The easiest way to think about the VIX is just as a fear thermometer for Wall Street. When the temperature on that thermometer is high, fear is running rampant. When it's low, everyone is calm and cool. It's really as simple as that. And here's the nuts and bolts of how it works. When investors get scared, they rush out to buy what's essentially insurance for their portfolios, and that insurance comes in the form of options. All that demand makes options more expensive, and that causes the VIX to shoot up. And on the flip side, when investors are feeling calm, they don't feel the need for that protection. So options prices fall, and the VIX goes right back down. So how do we actually use this thing? Well, that brings us to our second section, reading the market's mood. You see, the VIX isn't just some mood ring, it's a contrarian investor's best friend. It helps us spot potential turning points by keeping an eye on those emotional extremes. And here is the really crucial point. Markets are driven by emotion, right? And extremes in that emotion, that's often a huge signal that the tide is about to turn. Think about it. Extreme panic, when everyone is selling and the headlines are terrifying, well, that has historically signaled that a market bottom is getting close. And the reverse is true too. When everyone is comfortable, greedy, and feels like nothing can possibly go wrong, that's a massive warning sign that a market top might be forming. This whole thing really illustrates two very different mindsets in the market. During a full-blown panic, retail investors often react emotionally, right? They end up selling right when fear is at its absolute peak. But in contrast, institutional investors, what people call smart money, they often see that exact same high fear as an entry signal. They get opportunistic when everyone else is running for the exits.
Okay, so that's all the theory. But how can you actually put this to work? Let's move on to Section 3, your VIX action plan. We're going to go over some simple rules of thumb you can use.
Here is rule number 1, and it's a big one. When the VIX spikes above 30, that's your signal for extreme fear. Now, this isn't a signal to just go out and buy blindly, but it's a very powerful indicator that you should start looking for great companies that might suddenly be on sale. Think of it as a compass that's pointing you toward potential opportunities.
And if you look back at history, this isn't just some theory. Look at the major crises. Back in the 2008 financial meltdown, the VIX spiked above 80 right as the market was bottoming out. During the COVID crash in 2020, it hit 85, and that marked the beginning of a massive bull run. Even during those smaller spikes in 2022, they consistently marked short-term bottoms. The pattern here is pretty darn clear.
Now, for the second rule, we just flip it completely. When the VIX drops below 15, and especially when it gets down near 12, it's signaling the exact opposite, complacency. It means everyone feels safe, nobody's expecting any risk. And that, right there, is precisely when you should be the most cautious. It might be a good time to review your portfolio, tighten up some of your stops, or even think about taking some profits off the table.
The key that makes this whole thing tick is really simple inverse relationship. When the stock market, the S&P 500, goes down, the VIX, the fear index, goes up. And when the market rises, the VIX falls. They're like two ends of a seesaw. Understanding that dynamic is really the secret to using the VIX effectively. So, this brings us to our final section, the contrarian's secret weapon. Let's put all these pieces together and see how the VIX can become a really powerful tool in your own arsenal. Here is a super simple framework you can use. Step 1, you see the market is in a total panic. The headlines are screaming, and your gut is telling you to just run for the hills.
Step 2, before you do anything, check the VIX. And Step 3, if that VIX level is high, but say above 30, use it as your compass. It's telling you that now is the time to start hunting for great long-term investments, not the time to sell in a panic.
You know, it all boils down to a really powerful idea at the heart of contrarian investing. Buying when everyone else is scared is often the best trade you will ever make.
So the big takeaway here is simple. The next time the market is crashing and it feels like the sky is falling, just take a breath. Before you react, check the VIX. It might just be the signal you need, telling you it's time to be brave when everyone else is fearful.
If you enjoyed this explainer and got some value out of it, please don't forget to like and subscribe to the channel. Thanks so much for watching, and happy investing.